Hey, welcome everybody. This is the Options Moneymaker Q&A session. Today is October 21st, 2020. It's 7 p.m. Eastern. I'm Mark Dannenberg, and Aaron Rumley and Michael Kastner will be with me this evening also.
Hello.
Hey, Mark.
All right, we're going to go ahead and get started here. The purpose of these Q&A sessions that we do every 2 weeks is because we are very committed to helping you learn how to trade. I think any process of learning how to trade, any process of a trader becoming a trader involves learning to trade before they trade to earn. Now, we always promote trading in sim mode. We promote trading in a paper account before you trade live, because it's a way for you to get started and get acquainted with what you're doing and test your understanding. So the types of questions that we may encounter during the Q&A have to do with the adaptive entry system that we use for identifying trends. It is absolutely an outstanding system that was developed by New Cycle Trading and Analytics. And it's a very, very simple approach to helping traders understand what the very immediate probability of a move is and in which direction. The Profit Sweet Spot Matrix that we use for tracking the daily Cycle Founder Plus crosses, the live trading room, which is something that is just a core part of Options Moneymaker. And we discuss the adaptive entry system in there all day long. We discuss how to trade futures properly. It's really a real-time trading and support environment for any trader who wants to immerse themselves in trading. We trade both futures and options here at Options Moneymaker. We primarily focus on futures in the live trading room during the day, but people have questions about options trading. We are happy to answer those questions. The beauty of the adaptive entry system is that it is effective with both options trading as well as futures trading. So the first part of the live trading room session is focused on a review of a watch list of stocks and indexes that we're looking at for possible options education, options trades. And then right at market open at 9:30 Eastern, Aaron will identify any valid trades from our watch list of stocks that are designed for options traders. And then the rest of the day, we're primarily focused on futures. But again, anybody who wants us to identify or provide some information to them on options and some education on what to do with an options trade, we're happy to do that. And as I mentioned, New Cycle Trading and Analytics, we have a very close collaborative partnership with New Cycle Trading, and they've just been awesome to work with in developing the adaptive entry system. So any questions that you may have about any of those topics or other topics that revolve around areas that we cover in our curriculums. Okay, so if you've been in our live trading room or if you've listened in on the end of day reviews that I do of the performance for the adaptive entry system that day, then you know that I strongly encourage everybody to update their personal trading plan at the end of the day. Now, usually we do our own updates at the end of the day. We do it in a recorded session so that everybody can kind of follow along and understand the importance of it, but also how that personal trading plan is helping you see what your income could be over the course of a 12-month period. So the last 2 days, I did not do that at the end of the day. So we're going to do that here. So first thing I'm going to do is I'm going to pull up our tracking spreadsheet. So I'm going to be looking at Tuesday the 20th and Wednesday the 21st. And we have 2 categories that we log our information, trading performance, into a personal trading plan just to show you different variations of how this adaptive entry system works. It's the exact same tool, the adaptive entry system, but you may choose to trade a limited number of hours. You may choose to trade a more expanded number of hours. You may choose to trade all of the signals, some of the signals. So we've kind of carved out two different scenarios, and our carving out of those scenarios is not intended to suggest that you're limited to only those two choices. We're tracking 9:30 to 12 o'clock, taking all signals, and we're tracking 7 a.m. to 4 p.m., taking just trend bias and trend continuation signals. And this is referencing trading the NASDAQ 100 futures and using a 5-minute chart. So we track those because we're showing you what a longer time commitment to trading is during the day using only two signals versus a shorter time commitment during the day using all of the signals. And then this program where we track, thanks to Aaron, has been designed in such a way that we can take a look at our averages and see what the average performance is in any combination of categories that we choose. So in this researching line, for example, we could choose a different set of time frames, and we could evaluate 9:30 to 4 instead of 7 to 4, or we could evaluate 7 to 10. We can evaluate whatever combination of start time and end time we choose, and we can use any start time and end time and look at it relative to trading all of the signals plus fractals, trend bias only, fractals only. So it's a very powerful way for us to help any trader who has maybe a more limited commitment of time to understand what they could expect from their time commitment to trading. If you have 2 hours a day, let us help you in the live trading room, or here tonight in the Q&A. Let us help you understand what you could reasonably expect in terms of performance during that period of time. Our performance information is based on the last 92 days of trading. Now there's 20 trading days in a month. So we're approaching 5 months of data that we have. And why is it only 5 months? It's because that's when we started using this particular tool and profiling the personal trading plan at the end of every day. All right, so we're going to jump back to our daily summary. And we're looking in the 9:30 to noon category and 7 to 4. Yesterday, we managed to do 35 points of profit. Each point on the NASDAQ 100 futures is worth $20. So that's 35 points. Today, we did 60 points. It's been a really good few days here. We had a losing day last week on Friday, but it's really been a good couple of weeks here. And I'm going to show you how that is going to fit into a personal trading plan and show you a 12-month income. In our 7 to 4 category, yesterday we did 95 points. That's a really strong day, 95 points. That's, again, $20 a point. And today we did 80 points at $20 a point. And again, you can scroll back and you can take a look at all of the prior days. We've had some losing days, 1 point, 4.25 points, 14 points, pretty small losing days. Had a bigger losing day back here, 71.5 points. I remember getting some questions about that. You know, is the system not working anymore? What happened today? Well, the nature of the market is that some days are going to be underperforming days, and then you're going to have a whole bunch of days that are going to be performing just the way you want to see them. So the most important thing for us is to take that information and plug it every day into a personal trading plan. So I'm going to start with a 9:30 to noon category, and I'm going to go over to our data entry field here. And we did 35 points, and we're trading 3 contracts. So 35, so you would take 35 times $20 a point times 3 contracts, and we're going to put in $2,100. That was our profit for the day in that category. We did 13 trades, and at 3 contracts per trade, that's 39 contracts. So that takes into account the cost of commissions, the expense of basically being a trader and trading. And then today we did 60 points. So $20 a point, 3 contracts was $3,600. And then we did 9 trades, and so that's 27 contracts. Okay, so I'm going to put in the other data here in the other category, and then we're going to talk about what the forecast is. In the 7-4 trend bias and continuation trade, yesterday was 95 points. That's just outstanding. And that's $20 a point, 3 contracts, so that's $5,700. And we did 19 trades, so 19 trades at 3 contracts per trade is 57 contracts. See how simple this data is to put in, but it's so critical that you do it every day. And today we did 80 points at $20 a point for $4,800. And we did 15 trades, 3 contracts per trade, so that's 45 contracts. Okay, so I'm going to start with our 9:30 to noon. That's our shortened window of trading time. First thing I look at after I plug in the data is right up here. Now, our 52-week trading plan is 15.5 weeks in, 15.6 weeks in. Of those 15.6 weeks, we've had 26 losing days. Now we keep track of the losing days because by default, every other day is a winning day. And we want to know what our loss run rate is relative to the number of weeks that we have behind us. Then these two calculations are going to help us understand what the average point value is for each winning day. And this one is what the average point value is for each losing day. The frequency of losses relative to the number of weeks is factored into those averages. So we can then use these averages as an established run rate. We know that for the first 15.6 weeks of a 52-week plan, we have run successfully at these rates. So we want to then forecast out the remaining balance of our 52-week plan at those same run rates because it takes into account the loss run rate, takes into account the averages, average performance of our winning days and average performance of our losing days. So in these two fields right here, it's important that we translate the run rate, 23.43, into our forecast. And minus 36.76. Okay, so now what we have done is we've married our future forecast for the balance of the 52 weeks to the actual run rate. That right there is going to tell you what you can potentially earn over the course of a 12-month period. Now, these numbers are going to change a little bit from day to day, week to week, because your overall performance may improve, your overall performance may decline a little bit, but bottom line is you're going to keep your eye on the target, whatever your target is. The target right now, if we assume the same run rate for the balance of 52 weeks that we've established for the first 15.6 weeks, is that you could have $170,937 income. Now you could. Now there's variables in there that you're going to see from day to day, but the further into your 52-week plan, the less likely it is that you're going to have significant variations in these numbers from your run rate to your forecast. Now, this $170,000 forecast is based on trading no more than 3 contracts. And the personal trading plan is designed and built for limiting your risk. And the way it limits risk is we have started this account with $5,000. So $170,000 is pretty reasonable income off of $5,000. And the first level of risk limitation, and there are 2, but the first level of risk limitation is we will not open more contracts than the margin requirement is 10%, more than 10% of the balance of the account. So let me say that a little differently. I think I might have said it a little confusingly. We look at what 10% of the balance of the account is. Then we look at what the number of contracts is and how much margin is required to trade that number of contracts. So with Infinity Futures, where we trade, each contract requires $500 of margin. In order to trade 3 contracts, that requires $1,500 of margin. That means that if we're going to stay under 10% of the balance of the account, we need more than $15,000 in the account balance. 15,000 times 10%, 1,500, so we can trade 1, 2, or 3 contracts with that balance. Second risk limitation is you, as you get more and more experience and being comfortable with your trading, deciding how many contracts you want to limit your exposure to. If I took this 3 max out, let me just delete that for a minute. You will see that your, that's incorrect, sorry. I'm going to go to 1. No, sorry, I meant to go the other way. Let's just say I put that at 30 max. Well, it'll grow up to 30 contracts. And you might not be comfortable trading 30 contracts. Let's say I put 50 contracts in there, and 50 might not be practical. You might not be comfortable trading 50, but it's going to grow up to whatever number you put here as a limited number of contracts. But before you would ever get to that, before it would ever scale up to 50 contracts or 35 or 20, you have to first of all have enough balance in the account so that that margin requirement is no more than 10% of the balance of the account. So I don't think 50 is practical. I think 3 is very practical. I think 5 is practical. That depends on your own experience level and your comfort level with your current run rate. So I'm going to leave these at 3, and you can see that the $5,000 starting balance has a potential of growing to $171,000 over the course of 12 months. All right, same thing on our 7 to 4 category, trading trend bias and continuation trades only. We've had 17 losing days in 15.6 weeks. That gives us a positive winning day run rate of 35.52 and a losing day run rate of 23.55. So we're going to adjust these 35.52 so that they line up perfectly with the run rate. These are the forecast numbers minus 23.55. Okay, so using the same numbers that we have as our average run rate to determine our go forward forecast based on having 17 losing days every 15.5 weeks. Now these numbers can change a little bit, but you're going to update your trading plan every day, so you're going to keep it current. Keeping our maximum contracts to no more than 3, that gives us a $362,834 potential income, having started with $5,000. If you decide that you are very comfortable with your trading and you're comfortable trading more than 1, 2, or 3 contracts, you could increase that to 5. You could increase it to whatever you desire, because you know that the plan will not increase, it will not increment or scale you up to a higher number of contracts until the balance is sufficient so that your margin requirement on that number of contracts will be no more than 10% of the balance of the account. So the 2 limitations of risk are designed for your protection. This one variable is designed for you as a trading business owner to be able to increase your income if you're comfortable with your trading, maybe even be ultra conservative, drop it to 2 contracts, and you can still make $276,000 potentially, having started with $5,000. Bottom line for me is, any way you slice it, the personal trading plan is an absolute must for you to keep your eye on whatever your run rate performance is driving for a full 12-month period. All right, so the adaptive entry system is what we use every single day. If you want to learn more about it, if you're brand new here, you go to optionsmoneymaker.com/investor. You're going to be able to view the daily results, daily recordings, end-of-day recordings, and you can also view the training that we provide on the adaptive entry system. So I want to put up the chart here. This is what people in the live trading room see every day. ES futures, NASDAQ futures, and the Russell 2000 futures, but we are primarily trading the NASDAQ futures. Okay, Aaron, can I do a quick sound check for you with you?
Yes. I can hear you. Can you hear me?
I can hear you, Aaron. Fine.
Seem to be having a sound issue.
How about now?
Yes, I hear you now.
Okay, great.
Okay, thank you.
I have a few questions
Okay, good.
that were submitted. If you want to pull up the personal trading plan.
Okay.
So Mark is asking, can you explain the profit percent of balance? So it's the day's profit and divided by the prior day's balance. So for the last line on there, the profit was 4,620 divided by the prior day's balance of $97,927. And then that's your return basically on the balance that you had.
Yeah, it's not really a number we focus a lot on, Mark, but it's out there because some people like to look at their performance on a daily basis based on a percentage of the account balance, but it's not a number that I spend a lot of time looking at.
And then Ron is saying, since I'm assuming you're talking about the LTR all tab, it's since the spreadsheet is showing 26 losing days, I think you should increase the average loss. So we've gotten this quite a few times. Those are not average profits and average losses. The average profit is actually greater and the average loss is actually less than those two numbers up there. It's not a simple average of the negative days and average of the positive days. It's actually more of a weighted average based on the assumption of one losing day per week. And so those are weighted and it allows us to have that be a variable. And I see that you say you should do one losing day in 3 days versus one losing day in 5 days. We actually had someone else request us to look at that. And I did go through and edit the spreadsheet just to take a look at it. Actually puts the year-to-date performance higher, but it's keeping it as a fixed variable. And we want to use it as a variable that'll change as our run rate changes, as the amount of profitable days and losing days are added to our trading plan, because we still have quite a bit to go here and it's going to change. And that allows a little bit more flexibility with the profit and loss numbers. And the 1 in 3 days actually shows a higher year-to-date projection. So we're going to keep ours where it is, be a little bit more conservative with that. And again, it allows it to be a little bit more flexible as we continue to track and as we continue to trade. So keep in mind that those are not straight averages it's not a straight average profits and average losses. Those are then taken and factored into how many losing days have been and how many weeks we've had.
Yeah, the average includes the frequency rate. And I don't think it makes sense to calculate that as a fixed number, increasing it from 1 to 1 point something or to 3 or whatever you decide. It makes no sense because we are 15 and a half weeks in. You know, when we get 30 weeks in, that number, that frequency rate may have increased or decreased. And so we want to keep it as a variable. So these numbers, in my opinion, accurately represent not only the average performance, but the frequency rate. So that's, I think, the most accurate way to do it so that it continues to adjust.
Mark, Diane's asking, are you teaching options for shares or options of monies?
I'm not exactly sure what the what you mean by options of monies. When we teach options trading, Diane, in our Profit Builder Plus program, we offer that program for any level of trader, options trader. Someone who's never traded options before could start there and learn everything about trading options against stocks, options against indexes, options against exchange traded funds. We are not, if part of your question is referring to this, we are not trading options on futures. Never have, probably never will. It's in our arena, we are either trading futures contracts, not options on those futures contracts, or we are trading options on stocks, indexes, and ETFs. And we teach both of those styles of trading. Okay, Mark's got a question. Is the Infinity Dome a part of AES? No, it's not, Mark. So AES is the software that New Cycle Trading built, and they built it on the TradingView platform. So you have a TradingView account and you have a New Cycle Trading account in order to have access to the adaptive entry system. That is your signal. That is telling you, hey, this signal suggests it's time for you to go long, buy a call option, or go short on a futures, or buy a put option. When you have the signal, you need a trading platform. You need a broker in order to place your trade. Infinity Futures is the broker that we use for futures trading. And E-Trade is the broker that we use for options trading. So, you know, this is just basically two different systems, and you've got to have both. One is giving you the message that now's the time for you to take action, and the other system is the platform that you're going to take action on.
Mark, Paul's asking, at the bottom of the dome, tracks your P&L. Is that a spot that you can track your ticks?
Not that I'm aware of. I haven't explored the dome to see whether or not there's a place that you can track your ticks, but it's pretty simple, Paul. I mean, it's manual, but you just take the total value at the bottom of your dome if you're trading in Q and you divide it by 20, because each point is worth $20. And if you want to do it by ticks, you know, it's divided by $5.
$5. Yeah.
5 ticks. 5, yeah, it's divided by 5 and it's going to tell you. Yeah.
Eric's asking, would the spreadsheet with daily results be available for us to use and plan for the best strategy at some point?
Are you asking, Eric, if the tool that Aaron created is available for you to use yet? If that's your question, it's not ready yet. To be honest, it's a massive spreadsheet, and Aaron is working on trying to resolve that. Our thoughts are at some point we'd like to make it available to our community of traders, but right now it is not available. We are doing all the tracking. We are keeping all the data. We discuss it frequently in the live trading room. We share it at the end of every day, also in these Q&As, and we can certainly answer any questions that you have about timeframes or particular categories that you want to focus on. And hopefully at some point in the future, it would be a tool that might be available to offer directly to our community, but not as of right now.
Mark is asking, what is a reasonable daily point goal for a brand new trader?
Well, you know, Mark, thanks to Aaron, we can answer that question. So now remember, this is 92 days of trading performance, right? Because we actually started building this tracking tool about that time and started discussing it extensively in the live trading room. But if you were to share with us like what time frame during a day you might want to trade, we can give you a reasonable idea of what you could accomplish during that time frame. For example, if you said to me, yeah, I'm all in, I want to trade 7 a.m. Eastern to 4 p.m. Eastern, which isn't generally 4 o'clock. It's somewhere after 3 o'clock. It's whenever we stop trading for the day. I think Aaron stopped about 3:15 today because just the performance was just so outstanding. Why are you going to spend your time taking any more trades? So if you, for example, wanted to trade, take all the signals on the adaptive entry system, trade from 7 to 4, we know that in our 92-day trading history that the average profit performance per day is about $1,300. $1,300. So if you take that 1,300 and divide it by 20, that's about 65 points a day. Okay, that's pretty strong. You might want to not trade that that length of time, 9:30 to noon. The category, one of the categories we track on the personal trading plan, is averaging $361 a day. So what is that in points? 361. That's about 18 points a day. Whatever you see as a reasonable profit target, it's important that you trade in sim mode and see if you can establish that run rate on your own. And I think it's not unreasonable to expect that perhaps initially your performance is 50 to 75% of what you see here. Because there's a learning curve for you. You're going to have to get a little traction. You're going to have to get a little comfortable. You're going to have to get comfortable with a sim dome. Then you're going to have to make the transition from sim to real money. And all of that has, different gradients of confidence. But these are reasonable numbers that you could expect to achieve. And then you can also zero in on, you're going to have losing days. We know you're going to have losing days, but based on a 92-day history, how many losing days could I expect? In the 9:30 to noon, although we're averaging overall $361 a day, there have been 23 losing days. Now, some of them aren't severe, but there's some bigger losing days in there. In our optimum category, which is the 7 to 4 all signals, we've lost 9 days out of 92 days. That's a pretty strong track record. What other questions do we have?
See, Greg's, I'm a stay-at-home dad with responsibilities for my children getting to from school, after school. Can you research all signals, no fractals, from 5 a.m. to 6:30 a.m. and then 8:30 to 1 o'clock? 2 o'clock?
You want all, no fractals. I gotta scroll up. Is that one right, Aaron? Just all?
Yeah, that shows you how many categories that we can track there.
Yeah,
If you just scroll.
Yeah. Aaron has done just an outstanding job of creating this and creating so much versatility in it for us to be able to sort and understand how so many different categories perform. And then Greg is looking for 5 a.m. Now these are Eastern times to 6:30. And so that tells me that 5 a.m. to 6:30 is averaging $271 a day. 24 losing days in a 92-day period. And the other time frame was 8:30 to 2. Okay, so go 8. 30 to 1400. And that's $717 a day on an average. And this is per contract, folks. So if you're trading a single contract, the average that we've seen for the 92-day period is $717, 22 losing days. That's a pretty strong number right there, Greg.
Mark is saying, once after sim and once I go live, are the live trades available to use with the live trading room? I assume I'd have to have the live trading room window open as well, correct?
Well, we always encourage, especially when you're learning, that you are in the live trading room and that you have the live trading room window open so that you can see our charts. The last couple of weeks, it's been Erin showing her charts. You can see our charts and you can hear the commentary. You can hear us talking about whenever we're entering a trade, whenever we're locking in a profit on a trade, whenever we're exiting a trade, what to expect coming up to a possible entry. And all of that, I think, at least for a few months, is helpful to really help you understand exactly how to interpret the signals and get comfortable with them. And then it's a real-time coaching session too, where you can ask a question in real time and we can answer it. It's in chat. I think, as you know, you've been there this week, but we can answer that and help you really clarify your understanding of trading.
A lot of people have their own charts up, their own dome up, and then just Zoom minimized in the background. So they're just listening to the live trading room. Since they have their own charts, they don't need to be actually looking at the live trading room, but they're listening in for help with entering and exiting a trade and any reminders throughout the day of where fractals are, or if a signal disappears, how we're evaluating it, which can be very helpful, especially starting off. And I see your other question here. I assume you can get in, trade for a few hours, jump out for an appointment, and then log back in. Absolutely. So the live trading room's a Zoom webinar, so you can come and go as you please, just with your own trading. Make sure that you're not in any trade, any futures trade when you leave, but absolutely you can come in, and we have people do that all day long. They'll tell me they're leaving to go walk a dog or to go to an appointment or go golfing, and then they may return in the afternoon. They may not, depending on if they hit their goal in the morning.
Michael's asking, do you have a history on fractals for 92 days? Some categories, 9:30 to noon, 7 to 4?
We don't
Fractal,
have
yeah.
92 days of fractals. I know that off the top of my head. If you're looking for fractals only.
It's 63 days. What time frame?
9:30 to noon.
It's about $209 a day on an average for 61 days, 12 losing days if you're only trading fractals. And what was the other time range?
7 to 4.
7 to 4. $479 a day. That's per contract. Anything that we share in this daily average on a dollar basis is based on one contract.
Okay, Mark, I won't be in tomorrow because the trend bias just at 7:25 just give us 74 points. So I'll see y'all next week.
Did it really?
Yeah, it did. Yeah, it came on.
Holy wowzer.
There's your, and that consensus too. I'm sorry I didn't let, but the trend bias, it'll happen at the same time. Trend bias consensus happen all at the same time. So that's a big move right there. About 74 points, 1,400 change, I think it is.
If you're just getting acquainted with the adaptive entry system, Michael's talking about this signal right here. This was a trend bias signal because it was a red bar that opened following the close of a first red bar in a new sequence. So that means we want to go short. And you can see here that the bar opened at 11,665. Now, first of all, it moved higher. That's what we
Yes.
refer to as a drawdown, but it moved up 7.5 points. Or we always use a 20-point protective stop, so it didn't even come close. So we would have been patient. This is on a 5-minute chart, and then moved a little bit lower, and then boom, this is what he's talking about. So you're short at 665. If you held for more than 10 points, it dropped down to a low of 591.
Yeah, Christian says he just took that 15 points on that entry.
That's
So,
fantastic.
so it does pay to come to the
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 Q&A.
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 Yeah, wow, that's amazing. I love it.
Well, it shouldn't amaze you. You see it every day.
No, but I love I like those big bars sometimes,
Yes.
we had a couple of them today. But anyway, so
Absolutely.
And so Greg's asking, I'm assuming you have a bracket order with a 40 tick profit and an 80 tick stop, and then are you manually entering a 5-point lock, or is this analysis an all or nothing? It's what we're actually trading. So we're inserting a 5-point profit, which means essentially we're just moving our stop to a 5-point profit once we are above that. Sometimes it comes back and takes us out for 5 points. Today there was frequent times where it did not do that and it kept running. And so even though we locked in, we put our stop at 5 points of profit, it kept running and took us out for our 10-point limit order. So we ended up with 10 points of profit, and exactly what happens is exactly what's being recorded. So on the intraday tabs, which is what's being used for all of our data, if it came back and took it out for 5 points, then we're recording 5 points. If it went and hit our limit order for 10 points, then and didn't take us out for 5, then we're recording 10 points. You can see it right there.
and then we periodically have a full stop out loss. We lost 20 points on this trade. We lost 20 points on that trade. And yet still, we lost 20 points on a couple of other trades. Those tend to put traders off. Here's, if you took, those and you lost 20 points on each, that tends to put off a trader early in the day, but by the end of the day, we had a really strong performance. Now,
Yeah, those are back-to-back fractals at 9:30, which just want to caution fractal trading at 9:30 when they're pretty close to each other. You can hit one and then hit the other all on that 9:30 bar, which is exactly what happened there. But all of this performance is not including fractals. We have the ability to include fractals, and sometimes they add to the day, and occasionally sometimes they don't. Today was a day where fractals didn't help as much as they normally do, but the overall performance, even with fractals, was just amazing today. AES really knocked it out of the park today.
Yes, it did.
How many points was AES today, Aaron? I'm sorry. How many points was AES today? You said 90?
It depends on the time frame we're
Eight-
looking at, but
80 on the
signal.
trend bias.
Okay, beautiful.
All signals
Okay.
was 134.
Yeah.
So while we're on the topic of fractals, Mark is just asking if we could provide a simple explanation of what a fractal is in layman terms. All right, so Mark, if you see this V on the chart, this red V below the price bar right here, and then you see this green inverted V above the price bar right here. So the red and the green. That green inverted V is what we refer to as an upper fractal, and the red V is what we refer to as a lower fractal. And a very, very simple explanation is we have a lot of experience with fractals, and it's not us that created the fractal methodology, but we've used it and traded it for a very, very long time. A fractal suggests that when the price breaks above an upper fractal or below a lower fractal, that there is an increased probability that the price will continue moving in that direction. So here's a lower fractal right here. and the price broke below the low of that price bar and just kept going. Here was a prior lower fractal. When the price hit the low of that price bar, the price just kept moving lower. And when you have situations where, there's a strong running trend, you had an upper fractal back here. When the price broke above that upper fractal, it kept moving. So a lot of people in our community will trade fractals by opening their dome and looking at the upper and lower fractals and simply placing a limit order at the high of an upper fractal or the low of a lower fractal. And if the price moves to that level, it will activate an order. You will then be short or long in the market, and all of the other automated features of the dome would kick in, and you would manage that trade just like you would any adaptive entry system signal. Mark had a question and then a comment, so let me just finish this up. In addition to all the tools provided through Options Moneymaker, does this also include setting up the account with a broker or broker referral? It does not include setting up the account, but we have brokers for futures and for options that we would refer you to, suggest that you consider using, particularly on futures. There's a wide range of margin requirements between brokers these days, especially when volatility crept back into the market. And the broker that we work with, Infinity Futures, has a very low, very reasonable margin requirement of just $500 per contract. There are some other brokers we've been hearing about in our community that are charging for that same contract trade $17,000 per contract. It makes a big difference when you're setting up an account. If I go back to the personal trading plan, and I remind you that we started these accounts with $5,000, well, I couldn't possibly do that if I was trading at a broker that required $17,000 of margin for each one contract. Here I can start with $5,000. I can trade one contract, and that still is only 10% of the balance of my account. So that's one of the key reasons that we like Infinity. The dome, the trading dome, is just one of the easiest methods of futures trading that I've ever encountered. And I personally am a huge fan of the service that they provide at Infinity also. So that's where we'd steer you. And then options traders, option trading platforms are a little different. There's a lot of great trading platforms out there. I prefer E-Trade, but we've traded on Schwab in the past, and we've traded E-Trade, and we have a lot of people in our community that trade Thinkorswim. And then Mark's comment, I love this comment. I've watched most of today and a good part of yesterday. Is this as easy as Aaron made it seem? Aaron, did you make it look easy?
Well, I think it was like printing money a little bit the past couple days with AES.
It was, wasn't it?
I didn't have any long-term investments. That's what we jokingly call anything that lasts longer, a trade that lasts longer than 5 minutes.
Yeah, let me see if I can get this right. Aaron's favorite trade is the signal comes on. She says, we're short, we're locked, 10 points, we're done. And all that happened in 20 seconds.
Yes. Yep. You witnessed that today.
I did. You had a few.
We didn't even get to say what price we were short at or where we locked at.
That's right.
We're out for 10 points.
Oh.
Dean's asking, how are you getting the values of the fractals? So the fractals on our chart are indicated by the green inverted V's and the red V's. And so the red V's are a lower fractal, and you're looking at the low of the bar. So up in the top left-hand corner of the chart, you see O, a number, H, a number, L, a number. So the red V's, we're looking at the L number, which go back because it just printed a new bar. So you have to put your cursor back, which is
the low value of the bar.
11,662 and a quarter. That's the low of the 1805 bar. And then for the green inverted V's, the upper fractals, we look at the high of the bar, which is at 11,701 and a half for the 1845 bar.
Now, Dean, you may be trying to assess the actual symbol value of the fractal. And if that is what you're doing, that's just an easy adjustment for you. The symbol is just telling you that there's a lower fractal or an upper fractal. It's the price bar value, upper, the high of the bar or the low of the bar, that is what you need to pay attention to.
And you'll hear me repeat them frequently in the live trading room, usually when I'm first identifying it, or you'll see my cursor go back and highlight the bar that the fractal's on a few times. That's because when you're in the middle of trading, it's very easy to accidentally read the open of the bar instead, or the opposite end, the high or the low. So I always confirm about 3 times to make sure that for an upper fractal that I read the high of the bar, and for a lower fractal that I read the low of the bar.
Eric is saying, additional question, is there progress on having AES trades automated? Is it something that might happen in the near future? More of a long-term goal? Would that be with Infinity and other platforms? Those are great questions, Eric. And we're not ready to discuss auto trading yet. I can assure you that Craig, our partner at New Cycle Trading and Analytics, has a passion for developing auto trading, but we've not made any commitments to make that available yet. If and when we do, you guys guarantee will be the first to know, and we'd have to take a look at what platforms it would be appropriate for those trades to be channeled to. So bottom line is, we're not really ready to talk about it.
Mark, can you click the arrow with the 4 that's right underneath the symbol on the top left part of your chart?
Yep.
So someone's asking what your indicators are. So on the price bars, we have the divergent bars and fractals, and we of course have the AES, and AES is what is being highlighted with those green and the red highlights, and then the labels, the T's, the C's, the M's, and T pluses, which I don't see them out there right now, but that's all part of the adaptive entry system. And then below that is the Cycle Finder Plus, which is part of what we use for our daily crosses that Mark mentioned that I announce each morning at 9:30. When we cross up, we're long on an option. And then when we cross down, we're short on an option, and that's based on a daily chart. So those are holding positions a little bit longer. And then the AO, which is not a new cycle trading indicator, it's the Awesome Oscillator. And then below that is the Cycle Finder, which is part of the Profit Flow Analytics. And then below that is the Profit Flow Oscillator. And so as you're part of the live trading room, you'll hear me talk a lot about the lower indicators and the alignment that we're looking at between those lower indicators to assess if we're going to have a specific signal come on, such as a consensus signal, needs an alignment between those lower indicators, and a continuation signal needs alignment with the Cycle Finder Plus. So it helps us identify what might be coming up with the adaptive entry system signal without being surprised, which helps avoid slippage on the trade and be prepared to know if you're going to be going long or going short on the next entry.
And just real quick, while we're talking about the chart, I want to make it clear also that the adaptive entry system signals are not exclusive to just trading futures. They're excellent for trading options. And I think it's important that you spend some time getting acquainted with particular time frames. You know, I'm showing a 60-minute chart here. You could trade a 30-minute chart. You could trade a 10-minute chart. You could trade a daily chart if you wanted to. And what I'm actually showing here on the longer term charts is just the trend bias signal and the continuation signals. And if you decided that you wanted to trade options, you can trade just simply the trend bias and continuation signals, which is the T plus, and you can see just visibly, you know, how well you can do on some of these. This is Amazon gave us a signal to go long on June 1st, actually gave us a signal to take the trade off on June 17th. And you can see how much rise you got out of that. Now, most people would have been out for a portion of profit or locking in some sort of a bracket order with a limiting stop, not let it all go all the way back. But then you've got other trades that are going to allow you to get back in, ride to the upside. You got trades here which will allow you to take a trade to the downside. That's on a daily chart. If I wanted to trade a little more intraday on options, I might choose to put a 10-minute and a 30-minute chart side by side and just look for some alignment between those. 30-minute, I think, can be excellent for options trading. We can jump to the S&P 500 cash index. Here's a great trade. They're really great to go back and look at in hindsight, not to hindsight trade and talk yourself into, oh, I would have done this, I would have done that. No, you've got to trade in real time to understand what you're going to do. But just going back and being able to visually identify where the signals were really gives me, when I first started working with AES, gives me a lot of confidence in how accurate these signals are. So, here's a signal in the 30-minute chart for the S&P 500 to go short. Buy a put there when that 30-minute bar opened at 10:30 2 days ago, 10:30 in the morning 2 days ago. Now, you're never going to catch the bottoms or the tops on rising bias trades, but there are ways that we can teach you how to lock in profits along the way. You can constantly adjust a bracket order to kind of follow the price down until eventually it takes you out of the trade for an overall profit. But just on the S&P on that trade, that bar opened at 34.91, I'm rounding off, traded all the way down to a low of 34.19, 34.20. So it moves 71 points. If you're trading a 50 delta and you were trading one contract, that's about a $3,500 profit trading one contract. It's $35 using a 50 delta on a 70-point move. So you can just scale back and forth as much as you want to, and you can see how the adaptive entry system signals work on options and on futures. And yes, you're going to have some losing trades. Just prepare for it. Let me widen that back out, and I'll just, here was a trade on the S&P 500 that told you to go long. It really didn't go anywhere, but you would have taken it off here on the white bar, so you get back a little bit. You have a little bit of loss there. So it's a matter of give and take, but you want to take more than you give, and that's what the adaptive entry system allows you to do.
Paul's
Mark,
asking, I'm sorry, Michael, go ahead.
Greg's asking on the OMM website, you did an AES training. About when was that recorded? This July when it was launched?
Actually, I'm not sure when that one was recorded. I've done a couple versions of it. So we've got one on the website that I think is a little more recent. We've got overviews, Greg, and then we've got actual training that you can learn. So if you go to optionsmoneymaker.com/investor, there's actually a education video on that website. optionsmoneymaker.com/investor, and you can view that full training. It's 2 hours, which includes some Q&A at the end, but it's pretty deep dive training on that.
Paul's asking, since fractals have such a high percentage success rate, is it a good trading strategy to put more contracts on the fractals? So the first thing I want to address is anytime you want to evaluate whether something is a good trading strategy, I always recommend that you do it in sim and go through and track your results and evaluate if that makes sense for your account. Now, it being a high percentage success rate, fractals from 7 to 4 is about an 81% success rate, which is about, depending on what other signals you're trading, which is, so it's about 6% higher than all signals 7 to 4 with the AES. So whether a 6% increase win-loss rate warrants doubling your contracts, I don't think that would warrant it for me personally. To me, they're very similar in a win-loss ratio, with all signals 7-4 at 74%, and then fractals from 7-4 at about 80, almost 81%. So me personally, I wouldn't take that small additional win-loss and look to double a contracts if I'm trading fractals. Something else to keep in mind is that fractal data is based on that you're taking a fractal trade even if you're already in an AES trade. So that complicates things quite a bit. If you're long a trend bias on one contract and then you break an upper fractal and you want to go 2 contracts, now it does complicate things. It's doable. But I personally don't think that it warrants doubling the contracts on fractals. Mark, do you have anything to add?
Yeah, my opinion very simply is I wouldn't deviate from your personal trading plan. If your personal trading plan has you scaled up to 3 contracts, don't just cherry pick one particular strategy and go, well, I'm going to put on 6 contracts on this one. That does not make sense to me because it is not in the boundaries and confines of a thoughtfully planned approach. And generally, you can put your trading plan together outside of market hours when there's no influence of the emotional impulse, the fear of missing out, and all of that other stuff. Just make your plan and then follow your plan. Just follow the rules and follow your plan. That's really all you need to do. I wouldn't deviate from it. And last thing I'll ask you, Paula, is if you could trade, and I'll use the lower of the 2 categories. If you could trade starting with a $5,000 account and you could make $171,000 over the course of the year, just following this plan, is that something that would satisfy you? If the answer is yes, don't deviate. If the answer is no, you're looking for a little more, well, then get comfortable with what you're doing and maybe adjust your contracts from a maximum of 3 to a maximum of 5, knowing that the only time it'll jump to 5 is when you have sufficient funds in the account so that that margin requirement is no more than 10% of the balance of the account. And all of a sudden you could be at $250,000, okay? And I'm not suggesting that you do any of this. I'm just saying, here's your variables. Don't do it haphazardly on a single signal or a single day or a single trade. Do it in a prescribed manner that you know you've thought about and contemplated outside of market conditions. You want to make $400,000? You know, make 10 contracts your max. That's on the smaller of the 2 categories that we're seeing develop right now. So that's my opinion.
Scott's asking, could you show us what the summary numbers would be for 9:30 to noon for just trend bias and fractals? It's going to be the last one on the drop down, just so you know.
You seem like you're familiar with this spreadsheet. Trend bias and fractals, 9:30 to noon.
Yes.
About $324 a day per contract. You can anticipate based on the last 91 days, maybe 18 losing days.
Paul's asking, do you just invest in options at the beginning of the day, and how long do you usually hold an option?
So our option trading in the live trading room is right at the beginning of the day, at the open of the market session. And it's based on our watch list of stocks. You can hear Aaron in the live trading room going through our watch list of stocks, which is right here. NDX, SPX, RUT, Amazon, Booking, Google, not Netflix, but we talk about it, Shopify and Tesla. That's our watch list. Aaron goes through pre-market information on those every day. And then if there is a signal that is valid at market open, she announces that to the live trading room. Beyond that, we don't provide any specifics as to when you should or how long you should hold a trade, what expiration you should use. We provide some guidelines. The Profit Sweet Spot Matrix, which is a tool where we've gathered specific performance data since January of 2019 on these daily crosses suggests by each stock or index what the average hold time is, meaning how long did it take on a daily chart for, we go to booking, how long did it take on a daily chart for a cross to the downside to reverse and then reverse again? We track that information. We suggest that you use an expiration that is about a week out beyond that average so that you have a comfortable time frame relative to what the experience rate has been. And then you have to choose what strike you want to trade, whether it's at the money. I always like to start right at the money with a 50 delta and then work my way out the chain if I want to reduce my capital commitment for that particular trade.
You can see there on booking, we had an entry on the Cycle Finder Plus when it crossed down. It actually crossed down on the 13th. We had a nice cycle lower, and then it crossed up today. And a nice little pull up there too.
So we wouldn't have held that long, but if you had held the entire time, you would have followed that down, and then today you would have been out of that put trade, and you would have been in a call trade because
And if
that's when
you're
the cycle reversed.
and if you're using the PSSM and using, for example, an 80% win rate, the average days that you're in it is 0.5, which means that you're usually in and out the same market day.
Well, today on the cross, it moved from 1660 up to 1704, so it moved up 44 points.
Yes.
Aaron, Paul's asking on the trend bias trades, the results of a 5 or 10 point gain for the entire trend in your profit taking.
We actually have both of those. I think we have the full cycle on there too. Yeah, so we have the full cycle is right there on line 11.
You held for the, go ahead, Aaron.
We do not recommend the full cycle. While it is great performance, that win-loss ratio is going to hurt you mentally more than you can even imagine, because when you hold for the full cycle, that means that you have to hold and not lock anything in when your position has 50 points of profit. When your position has 100 points of profit, you're going to just sit there and watch it. And that means that you could have all of that and you can end up closing it for a 20-point loss instead.
Here's some great examples right here. Here's a trade today that Aaron took 10 points and the full cycle lost 7. It took 5 points, full cycle lost 20. 5 lost 20. Here it took 5, full cycle gave you 20.
But it went over 20 because there was over 30 points possible on that as well. So you just don't know what you're going to get with full cycles. So we do track them because it's always good to have extra information.
This,
But
I just want to emphasize this number right here, this win-loss ratio. You said it, Aaron, but 33.3% winning trades. I don't really care that much what the average daily profit value is. That right there is going to take an emotional toll on you as a trader.
also has the highest amount of losing days.
That's right, 33 losing days. If you're committed to trading 7 to 4, why don't you take all the signals and average $1,300 a day with a 74% win rate, and you only have 9 losing days. This data has guided us away from some approaches and has allowed us to narrow our focus to other approaches.
In terms of when someone else, I think it was someone else that was asking what the performance was for trend bias and fractals, that performance that we were speaking of is locking in the 5 or 10 point gains.
Michael is asking, how did you pick the securities you decided to keep track of for options trading? Do you ever rotate different securities in and out? We don't actually rotate them in and out. How did we decide on them? It was a basket of stocks and indexes that I had traded over and over, for an extended period of time, except for Tesla. Tesla came on, on the scene later than most of the other stocks, but they are also fairly robust stocks. I'll say that. They have a level of volatility where the stock itself can actually act like an index. There's significant movement opportunity on most of these stocks. I'm not interested really in playing with stocks that, I get excited because it moved a point today and my 50 delta gave me 50 cents. Those don't really excite me. I've got other stocks on my watch list, but I don't really pay a lot of attention to them. Amazon, is a big mover. Amazon can move like an index in a day. Booking, we saw move 40 points today. Google is the same thing. Google was up today. I don't think he had a cross today, so it wasn't a valid signal, but Google was up 27.37. Google was up 45 points today. Those are the types of stocks and indexes I like to trade where there's significant movement, and with a 50 delta, I might be able to lock in 5 points, 10 points of profit, even trading 5 contracts. That's pretty significant.
Let's see. Robert's asking on the Infinity Dome, is there a way to set multiple orders to set a 5-point profit and a 10-point limit automatically? Robert, the only thing I know about is they have a multi-exit order that you can set multiple exits. Like if you had 2 contracts, one goes off at 20 ticks and then the other one goes off at 50 ticks. There's no way to move the stop that I know of. They've got a new program out. It's not just came out. So there's some newer, I guess you'd say setups, but I'm not familiar with them. And if you go to infinity.com, they've got videos about their new platform. So, but I'm not really sure about that yet. So, but that's the only thing I know is multiple exits.
Greg said, so my providers are OMM. Yes, thank you. TradingView. Yes, that's really a very minor subscription, but you need it to have new cycle trading. And then Infinity and E-Trade if you're going to trade both futures and options. That's exactly what we have. Your question is, who is Webull? Webull is just another brokerage trading platform. You can trade options on at Webull.
And just to tag on to TradingView being so minimal, for those of you that have ever paid for your futures data feed, just to give you an idea, for NQ, ESRTY, along with a bunch of other futures that I don't use, it's $4 a month. That's it, to get real-time data feed for futures.
I think that's pretty reasonable, Aaron.
I would say so. I know other people have mentioned that it's been much higher at other places.
Mark's saying on exits, closing positions, computerized predetermined price level based on option price or equity price. So if you're trading options, you're going to have a certain level of experience with the underlying index or stock that you're trading. And if you don't, you need to gain some experience with it on the movements. Or you need to follow something like our profit sweet spot matrix, which is the data I mentioned we've collected on each of the daily crosses since January 2019. And in the PSSM, because we know what the probability of movement is, Aaron can plug a certain win-loss ratio. We always default to an 80% win-loss ratio value, and that will tell us what the profit target should be. Now, the stock may end up moving more than that, but we know based on history what a reasonable profit target is. So those are the guidelines that we use on options.
Paul's asking, what was the process of determining that the profit and loss was the optimum range for NQ?
Just experience and observing the market dynamics changing. We really didn't start locking in the 5 points until about 2 months ago. And we just realized that it was advantageous when we had that 5 points of profit to lock it in and not let the trade come back to a loss. And frequently, as you can see in the performance, that it will continue to go on to our 10-point profit target. So 5, 10, 5, 5, 10. And, I'll add to this also, I've been challenged a few times, how logical is it to have a 10-point profit target with a 20-point protective stop? That question assumes that every one of your losses is going to be 20 points, and it's just not the case.
Yesterday was a good example of that.
Yeah, so yesterday, we lost 15 and a quarter points. We lost 14 points. We had 20-point stop outs, but first of all, the win-loss ratio is pretty strong on this trading. We don't lose 20 points on every losing trade. So the last thing I'll say about that is if you object or think that it should be different, you should trade for 3 to 6 months in sim mode and validate for yourself what you want. We've been doing this for a very long time, and we're very comfortable with the numbers that we're using. And I'll just say, I think it speaks for itself to look at our range of profits. If you look at 7 to 4, which is our optimum category, all signals, just look at the profit that we see. And here's a losing day, by the way. It was 1 tick. Here's a losing day, 2.5 points. I have to scroll back up here to find a really strong losing day. And we've got other days that are really pretty strong winning days. So here's an 85-point losing day. Yeah, the next 2 days were 62 and 63-point winning days, and then you see this whole series of winning days. I think more importantly, you've got to evaluate your averages. You've got to assess whether or not the averages are providing for you a level of income and satisfactory trading that you desire, and you just keep doing it.
And as you mentioned, we've been trading for AES for a while, but we've also been trading NQ since before AES. And Mark and I spent a lot of time in another spreadsheet that is not the one that we're showing, but another spreadsheet tracking a 10-point stop versus a 20-point stop versus a 30-point stop. And it always came back to that the 20-point stop seemed to be kind of that sweet spot to have a stop out there. That was way back when.
Way back when, yep.
Mark, I really won't be here tomorrow because I just took a continuation trade for 26 and a half. I only took 15 of it, so it's a continuation trade. On the you got to go to the NASDAQ.
Oh yeah, you're trading the NASDAQ.
Yeah, the 5-minute chart. Continuation trade.
So Richard, there was an update to the AES that the default settings are more in line with what the live trading room has for their default settings.
5-minute chart, Mark.
Oh, I'm sorry. I'm looking at other things.
That's okay. I mean, it don't matter.
All right. Well, good.
Somewhere there. I don't know. Maybe something's wrong here. We're looking at something different. But anyway.
Yeah. Good. So you're coming in tomorrow and you're going to try to do that in your account because you did all that in my account, right?
No, me and Aaron split it. We're talking on Skype. So we both would be here tomorrow.
Got it. Well,
good luck. Good luck.
I'll miss both of you.
Good luck to you.
No
I mean,
problem.
he made me stay. I was already over 100 points and I still had to keep running the live trading room today.
That's a shame.
Oh, well, that's just a shame.
Labor board.
Mm-hmm. Well, we can talk about that tomorrow, Aaron.
Okay, I'll be in it too.
I might as well just stay all night if you're coming in at 2 a.m. Mark, Mark said, thanks for the indicator's explanation. Would have further helped looking at a stock and explained. So hopefully your comment happened before I showed you through some of the stocks and how valuable the adaptive entry system signals are. Hopefully.
Paul's asking, which hours of the day do you suggest not trading? Like the last hour of the day?
Well, we generally do not trade the last half hour of the day. There's some exceptions to that. But the further we get beyond 2 p.m., we'll still take the trades, but we advise our trading community, really think long and hard about what your performance is for the day, and do you want to put risk out there as you get into the last 2 hours of trading. There's no particular period of time that I would say it's a bad time to trade, not with the adaptive entry system, but you just have to gain your own experience rate. We have data. We don't talk a lot about this, but we have data in each day's performance starting at 3 a.m. Now we usually talk about 7 a.m., but we've got overnight data also starting at 3 a.m. That's because when European markets start to influence the market. So we're tracking all that data, partly because we want to know what it is, and partly because it's going to help influence us if and when we get to the point where we really do want to do or are able to do auto trading. Just turn it on, let it run for 23 hours a day. Sure, Samir. Would you be able to check all signals 11:30 to 1:30? Where is that, Aaron?
Top, very
there we
top.
go. All
I'll eventually
signals.
make them alphabetical for you.
Oh, just always leave all at the top. It might be alphabetically.
It might
anyway.
be alphabetically there.
Yeah, 13, 30. Okay, Samir, $217 a day. That's 11:30 to 1:30. 31 losing days, but it's averaging over the 92-day period $217 a day. Last question goes to Mark. My prep work on equity options is to study the following each day: S&P 500, advancing sectors, equity selection based on several different variables you've listed in here: best week, month, option selling strategies, etc. We don't do any of that. It makes us seem really simple, but we don't do any of that. We just simply follow the Cycle Finder Plus, the adaptive entry system signals, and we focus on our watch list of stocks. And I just explained why I've chosen those stocks. You can do the same thing on any stock, on any index you choose to follow. But AES, I think, is going to be your winning bet for most any stock you're looking at for an options trade. All right, Mark, that's great. You have a great evening also. Glad you're here. Just let us know in the live trading room tomorrow if we can help. And if Aaron can't help you, just let Michael and I know. We'll step in and bail her out a little bit.
Aaron, I'm on your side, Aaron. I hadn't said nothing.
I was going to say, is he going to be in the room tomorrow?
Yeah, I hadn't said nothing,
with helping
Aaron.
me out.
Yeah, Aaron, I ain't said a thing.
So who's taking the overnight shift?
Sounds like you are.
Actually, it sounds like Michael's on a roll. I think he can just stay until 7 and then hand it off. All right, Michael, Aaron, any final comments?
No.
Okay.
Good.
Well, we're going to close down now, folks. Thank you for being here, and thank you for your interest and participation. We sincerely appreciate it, and we love helping you learn how to trade. Thanks, Michael. Thanks, Aaron.
Thank you. Bye. Bye.